Hey, what's up, everyone? Welcome back to My World of Stocks. We have a very special episode for you today because I'll be sharing with you every single stock that I own in my private, personal stock portfolio. Now, a couple things just to get out of the way first before we go any further. This is, of course, the internet, and I don't necessarily like all of my personal finances being readily available to the entire world. Plus, I also have a lot of friends and family that watch my videos who, I don't really want to know all of my investments and money and any drama that any of that can create. So the compromise that I do with you guys is that for my large private personal portfolio, I'll show you every single stock that I own, how much of a percent it makes up of my portfolio, and the average price that I paid on each stock, and how much I'm either up or down on each of those positions as a percentage, with screenshots from my brokerage account as proof that that what I'm telling you is true and that I actually own those stocks too. Which I think is very reasonable. The only thing I don't show is the full on dollar amounts, but to compromise with that, I actually created a brand new public portfolio, community portfolio, like around the start of this year, where I show everything on that one. And the reason why is because I only invest $100 a month in that portfolio, so it's a much smaller amount. So I'm more comfortable sharing that information out publicly. And I show you every single trade. I post every single trade from that one on the community Discord. I do monthly updates. So there's like full on transparency with that portfolio. And that's kind of the compromise. That's the public community portfolio where I show you how I invest, everything I do. And then I have my personal one where I update you guys less frequently on, but I'll still show you every single stock, and I'll show you some screenshots and stuff like that too. So it should be a lot of fun to show you this one too. And I hope you guys can understand where I'm coming from with this. And I just hope you guys enjoy the video. Before we go any further too, just want to quickly let you know what type of investor I am. I am a very long-term minded investor who is usually a net buyer of stocks. I'm almost always buying stocks in almost any scenario, but I also like to do the majority, or put it this way, I buy much more aggressively when stocks are going down. Whenever the market is going down, or any stock that I like in general is going down, I like to buy it much more aggressively so I can lower my cost basis, and then on the rebounds, on the recoveries over the long term, I can benefit from those lower average prices, which I'll show you all my average prices on every stock. I'll show you all of that in this video. And overall, I would say that I look out many years into the future. I like to hold stocks for many years, if not decades. And this portfolio itself is one that I've been, building up for many, many years too. It's already been like a decade and a half that I've been investing in stocks. So, time flies. But I like to look out even decades into the future too. I'm a very long-term minded investor overall. Sometimes I'll make shorter trades here and there, on occasion, but mostly I invest very long-term. Okay, so with all of that said, it took me a long time to organize all the charts and screenshots and everything for this video. And believe it or not, I actually recorded this video twice because I messed up the audio on the first video. So this is the second time I'm recording this whole video. Please do me a favor, guys, hit that like button and subscribe. It means so much to me. The hard work I put into my videos, if you guys do support the channel, it means so much to me. Thank you for all your support. I really appreciate it. Okay, now with all of that out of the way, let's go ahead and dig into this. I'm going to start by breaking up my portfolio into different parts so that it's easier to see, visualize, and understand. And then we'll do a very rapid fire style, running through every single individual stock that I own. I'll show you how much I'm either up or down as a percentage, and I'll give you a quick reason why I own it or how I feel about that stock moving forward. Sound good? All right, let's go ahead and jump into it. Now, first off, here's a very simplified breakdown of my portfolio. I currently own 44 stocks in total. It's a lot, which I split up into 5 different categories. Those being large core at 33% of the portfolio, which are my 5 largest stocks that I have the most conviction, I would say, for. They're basically like my top 5 favorite all-around stocks to own in the market. And so I try to keep those at around at least like a third of my entire portfolio just in those 5 stocks alone. Then I have my small core category at around 22%, which are 12 additional stocks that I really love, but maybe not quite as much as the large core positions. And then I have a dividends category at over a quarter of the portfolio, which are a combination actually of 14 different stocks that could also be categorized as core positions, except that I am primarily attracted to these for their juicy dividends, among other attributes. And then I always try to allocate also around 10% or less to each of international foreign stocks, which currently contains 4 stocks within it, as well as speculative kind of higher risk stocks, of which I currently hold 9 of those. Now, just so you know, all of these stocks are very rounded off just for simplicity's sake to, make a nice even 100% pie so I can make some easy charts to show you and stuff, make it easy for the YouTube video. But just know that these percentages are heavily rounded off and you'll see what I mean here. But starting with the large core category, my absolute largest stock of all remains Microsoft at about 8% of my entire portfolio, which, and again, 8% of my entire portfolio, that's rounded off. It's around there, around 8% of my overall portfolio. And I'm currently up, I've doubled up on it in terms of gains. And I would actually be up a lot more if I didn't keep buying it every year as it continues to climb, because Microsoft stock has always been a very good performer. It usually climbs every year, but I keep chasing it because I love it that much. And so that kind of hurts my average cost basis, but I'm still up a good amount, but I could be up a lot more. Anyway, they're a leader in some of the most crucial technology markets of the future: computing, cloud, AI, business, and more. So I'm always going to be invested in Microsoft. I really like it. Then at about 7%, I own Nvidia, which I'm currently up over 900% on, and I'm actually up even more in my M1 Finance account, but my larger position is actually here on Robinhood, where it's up around 900%. By the way, I'll be showing you screenshots from whichever brokerage account I have the largest position in for that stock. I do have multiple brokerage accounts. I use Robinhood, I use E-Trade, I use M1 Finance, I use Fidelity, I have SoFi, so I have a few different ones, but I would say especially in like more recent years, Robinhood has always been kind of my favorite to use. So that's where I've built up like some of my biggest positions. So most of the screenshots are going to be from Robinhood. But anyway, I love Nvidia stock. It's skyrocketed in recent years, but I still love them for the future, especially in their work with artificial intelligence. Then also at around 7%, I have Google, which is actually my number one favorite, I would say, just kind of all around stock in the entire market right now. And I've been buying a ton of this one, especially in recent years, where I'm currently up over 40% on it. And I do plan to continue buying even more. Then at about 6%, I have Tesla, a longtime favorite of mine that actually purchased a ton of shares of it when it crashed into the ground and everyone was saying that they'd go out of business. Well, not only did that not happen, but the stock actually proceeded to skyrocket from those lows, leaving me still up over 600% on my position, even after a major pullback these past couple years. And by the way, I've already sold a lot of my Tesla stock in the past too, which I've talked about in other videos. You can look them up on YouTube, but I locked in some huge profits on some of those sales. Sometimes around 1,500%. I think one time I sold some stock, it was close to like 2,000% gains on it. It was crazy. So I made a lot of money on Tesla. I'm very happy about it, and it's still, one of my larger positions. And then finally, rounding off the large core positions is Amazon, another longtime favorite of mine. I'm only up around 86% despite the stock skyrocketing over the past decade, but that's because, similarly to Microsoft, I've kept buying it even more as it climbed. But I'll tell you this, I plan to buy still even more of Amazon stock in the future because I don't even feel like they've reached their potential yet, even at their already massive size. I still think they have a lot more to do. Moving on though to the small core section, we have the largest holding here in Disney, ticker symbol DIS, at about 4% of the portfolio, which has seen their stock price plummet in recent years. And because of that, despite this being one of my oldest holdings actually, I'm just barely positive on it. And in fact, sometimes I'm usually negative on Disney stock. However, I do plan on buying much more of the stock while it is currently down. Then I have Meta at also 4%, which I've actually started turning a lot more bullish on in recent years, given their insane profitability, their gigantic user base, and their investments into AI and the metaverse. And I'm currently up 87% on this one, and very happy about the recent climb. Then I have Palantir at just about 3%, one of my favorite AI stocks that I bought very heavily while it was down, and that's actually left me up over 130% on my position. So really good performance there on the recovery. Love Palantir for the long term. After that, I have SoFi, a fintech that I also started buying around the same time as Palantir, except this one has remained struggling a bit. However, I think they have a ton of future potential too, and I'm currently up 17% on my own position, and I will likely keep buying more in the coming years too. It'll probably remain volatile as well. Next up, Duolingo, a favorite of mine that I purchased while it was heavily beaten down, and that left me up over 120% after the recovery, which I plan on holding on to long term for their work in simplified online education, as well as all the related AI technologies they've developed. But I'm probably not buying any more at this time. It's already climbed a lot, but it is a stock that I enjoy holding on to. From here on, though, the rest of the small core positions are going to be around 1% each. Like I said, they're rounded off. Could be higher, could be lower, but roughly around 1%. Let's just keep it simple. With the biggest of those being Apple, who I mostly just own for their insane size, profitability, and their sticky ecosystem of products and services. However, at its current valuation, I don't really plan on buying any more, but at the moment, I am up over 45% on my position. So it's been doing well. I just think it's too highly valued, so I'm not buying any more at this time, though, just holding it. Then I have Visa, which is, of course, a very well-recognized leader in finance, and my largest position is actually on E-Trade, where I am up over 100% on my position. A little bit of a boring stock, though, but one that I do love to hold on to. Probably not buying anymore, but I do enjoy holding it. And then after that, I have Scott's Miracle-Gro, a leader in garden and lawn care, among other things, which I also purchased while it was heavily beaten down, and now I am currently up over 42% on it after a decent recovery. It's kind of hard to see on this chart here, though, because they had climbed much higher than that before, but I'm just kind of holding on to my shares at the moment, but I might buy more, but we'll see. But then I have VeriSign after that. This is actually one of my somewhat newer positions that I purchased for their domain leadership on the internet, which I'm currently negative on my position, but that's okay because that just means that I can buy a lot more of it. So I actually like it when stocks are down. Speaking of negative positions, though, up next I have Intel, which used to be the big dog in chips until Nvidia and AMD started to steal the spotlight. However, I'm betting on a long-term recovery here. So even though I am down about 10%, about double digits, I probably will keep buying more of this one. I like to buy when I'm down. Then I have General Motors. A lot of people told me not to buy this one, but I just think that the future of the automotive industry will be large enough to support multiple players, GM included. So I bought it for the cheap valuation, and currently it's been working out for me as I am now up close to 20% on my position. And then finally, I think this might be my newest stock purchase. One of my newest, might be my newest. It is in Take-Two Interactive, the video game giant that I purchased ahead of the upcoming GTA 6 launch scheduled for next year. And currently, I am actually negative by over 4% on my position, so I'll probably be adding more to that one. And then, that'll bring us now over to the dividends portion of my portfolio, which includes 14 stocks at over a quarter of the portfolio. And first up here, we have one of my favorites for dividends in Verizon at just about 4%, the telecommunications giant, which I'm currently just slightly positive on, meaning that I would love to buy much more of this stock because it's not only down a lot with a dirt cheap valuation, but guys, the dividend is also sky high at over a 6% yield. So I definitely plan to buy a lot more. Then I have Pfizer at also around 4% of the portfolio, which is really the world leader in pharmaceuticals, yet the stock got crushed coming off of the pandemic. And so I've been scooping up shares myself, which I'm currently still negative on, but I plan to keep buying a lot more at these levels, with the dividend also being very attractive at over 5.5% currently. Up next, another biotech, but this time in AbbVie at about 3% of my portfolio, which I haven't really purchased again in a long time because I initially bought a ton of it when it crashed on the acquisition of Allergan market hated that. I've said, okay, I'll take the shares. And that resulted in 166% gains over that time. And of course, they pay a very nice dividend too, above 3% at current levels. However, because my personal cost basis is so low, I actually get a monstrous 8.5% yield, which I am super happy to keep collecting year after year. By the way, the dividend screenshots that I'm using here, these are from seekingalpha.com. I'm just showing you the screenshots of what these stocks are currently yielding if you were to buy them at the current price for the dividend yield. But when I write over it in green, that's showing you my personal yield, because if I have a lower cost basis, that means I actually get a bigger yield. So I'm showing you what yield I would get based on my personal cost basis. Okay, now moving on, I also have Medtronic, one of my favorite kind of newer additions to my portfolio over the past couple of years. Not super new, but somewhat. And they're a leader in medical devices and healthcare products, which took a beating from the top. So I decided to start scooping up as many shares as I could get my hands on, with my current position being up over 13%, while also collecting a dividend yield of 3.5%. I love Medtronic stock. Up next, though, is actually the only ETF in my entire portfolio, and that is the Vanguard High Dividend Yield ETF, which I'm currently up 58% on. I get to collect a yield of 4.5%, which I'm very happy about. It's just a great all-around dividends ETF with an attractive yield. I'm up a bit, so I'm not adding any more, but I like holding on to it. From there, though, I have Extra Space Storage, which is actually the only real estate investment trust that I own at about 2%. They're a self-storage real estate investment trust, which I think is very safe for the future. I don't see storage facilities ever going away or not being needed. So I bought a bunch of the stock right after it crashed from the top coming off of the pandemic. And so far, the rebound has left me up over 20%, with also a dividend yield of more than 4%. Very happy about it. And then I have another biotech, but this time in Merck, at also about 2%. Very solid leader in pharmaceuticals, which I'm not really planning to buy more of at this time, but already it's benefited me with more than 60% gains, as well as a dividend yield of more than 4% too. After that, though, I have my favorite bank stock in JP Morgan Chase. The rest of these, by the way, will also be around 1% each. It could be up or down, but around 1%. And with Chase, though, guys, you know that I'm not the biggest fan of bank stocks, but I do like Chase for their leadership. And after more than doubling up on my position in terms of gains, I kind of have just been holding on to this one ever since, while also collecting a dividend yield of more than 5%, which is really good for Chase. Then I have PepsiCo, which I own for their leadership in foods and beverages. It's always been a great performer, and I am currently up close to 50% on my position, with also a dividend yield of more than 4.5%. Then it's my second bank stock in US Bancorp, one that I really just picked up because of how much they crashed during the recent banking crisis. And so far, it's paid off nicely for me with 38% gains and a dividend yield of about 6%. Then it's another biotech, this time in Bristol Myers Squibb, which I'm currently negative on, but I plan to buy a lot more at these levels. And that's for their leadership in medicine, as well as that really juicy dividend of almost 5%. After that, I have Broadcom. This is a tech leader that I really wish I would have purchased a lot more of it, because it proceeded to skyrocket after I bought a lot of my position in it. But, that left me up 144%, which I also get to collect a dividend yield of more than 3%. I haven't bought after the climb, but I'm still holding it. Then I have Cisco, another leader in tech, which was actually a newer addition of mine this past year, and already I'm up about 10% with a dividend yield above 3%, and I'll probably buy more too because I really like this one. But finally, rounding off the dividend stocks, I have Tyson Foods, the leader of meat and poultry products, which is a market that I don't think will ever go away. And after buying some of the stock on a recent crash, I am currently up over 16% on the rebound, with also a dividend yield of 3.7%. All right, guys, that's going to bring us now, though, to the international portion of my portfolio, which only makes up less than 10% of it. I usually try to keep it below 10%. And currently that holds, and by the way, I try to keep it less than 10% because I just feel more comfortable investing in domestic stocks, companies that I know their products. It's easier for me to understand them. So international stocks, I try to limit the exposure there a little bit, 10% or less. However, With these one, there's 4 different stocks. However, they're all Chinese stocks. And that's just because that's where I feel I really see the most potential internationally, in my opinion. There is, of course, a lot of risk with Chinese stocks, but that's, again, why I try to limit the exposure there a bit. With that said, though, Alibaba is the largest of them at currently around 4%, which I am only up around 8% on the position. And considering how much this e-commerce and cloud computing giant has fallen from the top, I definitely plan to buy more in the future. After that, though, Baidu comes in second place with about 2%, which I am actually negative on. But I absolutely want to buy more of this one because of their leadership in many different internet-based technologies, among other things. They're kind of like the Google of China, whereas, for example, Alibaba is considered like the Amazon of China. But after that, there's Tencent, comes in third at also about 2%, very similar to the other stocks, and I also plan to own this one very long term. However, this one also has been my better performer of the Chinese stocks with 33% gains so far, and they do so much stuff, AI and also gaming and everything, so I love them long term. And then finally, the EV maker NIO comes in last place here at under 1% for sure. It's an EV stock that I actually made some huge profits on it when I completely sold out of it at the top. I documented on my channel. You can watch past videos. I had some really great gains on NIO stock, and I sold when it was near the top. But ever since then, it actually had a giant crash, and I decided to buy back into it, which I am currently still negative on my position by close to 10%. So I'm not doing too well on it, but I may buy more of it. All right, guys, that's going to leave us now, though, with the final category of the portfolio, and that is, of course, the speculative group of stocks, which is comprised of 9 stocks in total at under 10%, with most of these being either unprofitable companies or just overall higher risk than the other positions in my portfolio. And so I try to limit the exposure here a bit too, keep it at, under 10% if possible. Now, again, these are all greatly rounded off, so just keep that in mind. They could be higher, or they could also be much lower than 1% too. A lot of them are much lower than 1%, but generally it's going to be around that range. So kicking things off here with the largest of them, that's going to be 3M, the giant conglomerate behind Post-it notes, Scotch tape, and many other things. I actually never considered them speculative, but recent lawsuits and business restructurings sent the stock crashing because a lot of analysts were saying that they were at risk of going bankrupt. However, that's ultimately proven to not be the case, and currently I am actually up over 30% on my position after a recent rebound. Next up, I have Upstart, a fintech that I own for their expertise in using AI to disrupt the traditional lending market, which is gigantic in size. And currently, I am up 88% on my position, which I plan to continue holding. After that, I have another AI specialist, but this time in C3.ai, who I've always kind of considered like the poor man's Palantir, or like the little brother to Palantir. However, I am currently negative on this position, but I do plan on continuing to buy while it is this low. Then I have Robinhood after that, which is where you've seen, again, almost every position screenshot in today's video, because I've been using Robinhood for many years for the majority of my stock investments now, and I continue to really enjoy using the platform. I will say, though, SoFi more recently has been attracting me a lot too. I think they're a great rival, but at least as an investment, well, Robinhood has actually served me quite well, as I'm currently up over 80% on my position. I just use Robinhood so much, I figured I might as well be invested in it too, so that's kind of why I own it. After that, though, I have Hims and Hers Health, an online or kind of direct-to-consumer health company that I am no longer purchasing any more shares after gaining over 130%. And in fact, I might even sell them in the future if it continues to climb, just to kind of lock in some profits there. But overall, not a bad company. It's just one that I don't really keep track of as much as I probably should. So that's why I feel like, I don't know, I should probably just sell it, cash in the profits, but we'll see. On the other hand, Teladoc continues to be one of my worst performers. I do still plan on holding it for the future of telemedicine. That's why I bought into it. But currently, it's been a rough ride, with my shares still down about 17%, and that is even after I recently doubled down on it just to lower my cost basis, and I'm still down a lot. So yeah, it's been a rough ride with Teladoc, but we'll see how it turns out. After that, though, I have Lemonade, which is similar to Upstart, except they're trying to disrupt the traditional insurance market, and currently I am up 13% on this position. With CRISPR coming up next, though, one of my newest additions to the portfolio. Not a very good performer thus far, so I'm currently down 14% on my position, but I just bought a very small amount of it so that it would be easy to double down on it in the future if I choose to. But I'm investing in them for the future of gene editing. But I'm still a little shaky on them. I got to do more research on it. I want to be more knowledgeable about them. But yeah, it's one that I just kind of want to dip my toes in and then maybe add more. And then finally, the tiniest little gamble here that I made on New York Bank, which I only purchased as a kind of just a very short-term bet that they would not go under. And so far, it's paid off a little with 15% gains, but I might actually just sell it soon. I don't even keep track of it. It was meant to be a very short-term gamble on my part. I made a little, 15% gains. I feel like that might be good enough to sell, but who knows? We'll see. We'll see how it turns out. But there you have it, guys. Those are all of my stocks that I currently own right now and for the future. I would love to hear what you all think about them, and especially if there are any other stocks that you think I should add to this portfolio that would complement this portfolio well. I'd love to hear it, because I actually want to make a follow-up video on this, an update video, talking about some stocks that you guys think I should add to this portfolio. So if you have any suggestions, please drop them down below in the comment section, and let me know also about your portfolios. I'd love to hear about them. I'd love to chat with you. I hope that you're all doing well with your investments, with your portfolios, and thank you for stopping by and for listening to me rant about mine. It was fun, and I hope you enjoyed it. But yeah, thanks again for all your support, my friends. Really appreciate it, and I will catch you in the next video. All right, take care, everybody. Bye-bye.